All right, so we're diving into Prudent Corporate Advisory Services today. You want the inside scope on how they're doing, what it all means if you're an investor, and we've got all the goods to figure that out. Concall transcripts, investor presentations, quarterly reports, the whole 9 yards.
Yeah, and what's really interesting about Prudent is they're really making some noise in the financial services world. Their Q2, their second quarter in fiscal year 25 performance was stellar.
Yes, all those numbers.
Yeah, a 50.5% year-on-year jump in their consolidated revenue and EBITDA growth of 59.3%. I mean, that's impressive. And their consolidated profit after tax, the PAT, saw an even bigger jump, up 69.3% year-on-year.
Yeah, those numbers definitely jumped out at me.
Yeah, they're not just growing, but they're growing and they're making money, which is a good combination.
Exactly. And they hit a big milestone, too. They crossed the D 1,000 billion AUM mark in Q2.
Yeah.
It's huge.
Yeah.
So what's driving this kind of growth? And the bigger question is, it's sustainable.
Well, I think hitting that 1,000 billion AUM assets under management mark is a pretty clear signal they're doing something right. One key driver is their focus on individual equity AUM. So remember, more and more individual investors are entering the market these days, and Prudent strategy seems to be perfectly aligned with this trend. They've seen remarkable growth in this area. Their equity AUM has shot up 44% in just 1 year. That's going from 65,564 crores in September 2023 to 1,003,965 crores in September 2024.
Okay, so they're riding this wave of all these new individual investors coming into the market, but how are they actually reaching these people, converting them to clients? What's their business model?
Yeah, well, their model is really interesting. It's a B2, B2C business model. So essentially, they're bridging the gap between, your asset management companies or AMCs, mutual fund distributors, the MFDs, and retail customers.
Like us.
Exactly, like you and me. And it seems to be working really well for them. It's like this well-coordinated network where everyone benefits. Prudent kind of connects the dots and makes sure everything runs smoothly for everybody involved.
So they're kind of like the matchmaker of the financial world,
Exactly.
connecting the investors to the right products
Yeah.
through this network of distributors they've got.
Hmm.
Pretty clever. But speaking of distributors, there's been a lot of talk lately about those commission rate adjustments by those big players, HDFC, Nippon. How is Prudent handling all of that?
Yeah, that's a great question. So HDFC and Nippon, they revised those commission rates. And it's mainly because of those. I mean, remember those exceptional market movements we saw over the last couple of years? So that was a big reason for that. And it was, kind of a shakeup for the industry. Now, while this is going to have some impact on Prudent's revenue, they've estimated that that full year hit to their top line, it's going to be around 6 crores,
Okay.
which is actually, less than 0.5% of their total revenue. So not a huge blow. Plus, they're strategically passing on some of these rate adjustments to their distributors, which helps them protect their profit margins.
Right, so they're sort of sharing the burden there, which is a smart move. Shows that they're really committed to keeping that strong relationship with their distributors. So are they putting all their eggs in this mutual fund basket, or are they branching out at all?
Well, that's where it gets even more interesting. They're not just sticking to mutual funds, they are diversifying. And insurance is really their star performer. It's become a significant part of their revenue stream. It's gone from just 7% in fiscal year 20 to 13.8% in fiscal year 24.
Wow, insurance. Seems like a real hot spot for them.
Yeah.
So what's their strategy in this space? Are they just kind of testing the waters or going all in?
Well, they're definitely taking it seriously. It's a strategic approach. So in life insurance, they're focusing on those retail products like term insurance and traditional plans, things that, everyday investors are interested in. And then with general insurance, they're really looking at that health insurance segment, which is, it's a huge growing market.
Right.
And they're smart about it. They're using their existing network, over 30,000 MFDs to distribute those insurance products. Think about that reach, right? Over 11,000 of those distributors are already actively selling insurance.
Yeah, that's a powerful network to tap into. Gives them a real advantage.
Yeah.
So insurance, but what about, are there any other financial products they're offering?
Oh, yeah. They've got a whole range of other products. Think of things like portfolio management schemes, your PMS, alternative investment funds, or AIFs, bonds, corporate fixed deposits, even the national pension scheme. They're basically looking to be that one-stop shop for all your financial needs.
Okay, that's ambitious. So how are they managing all this growth? It must be a massive undertaking.
Yeah, well, they're really leaning into technology to, streamline their operations and improve the customer experience. And it's a very customer-centric approach.
Customer-centric, that's a word we hear a lot. What does that actually look like in practice for them?
Well, they've developed a whole suite of digital platforms,
Yeah.
each one tailored to specific needs. So, for example, Funds Bazaar, that's their online platform for investing in mutual funds. It's like a one-stop shop. You can research funds, compare them, make your investments all in one place. And
Nice.
then you've got Policy World. That one's dedicated to insurance solutions. So you can, explore different options, compare quotes, even buy policies online. They even have Prudent Connect, which is like a virtual office for their MFD partners, and Wise Basket that lets you invest in multiple stock portfolios. And get this, they even have a chatbot. It's called FundsBot.
Wait, a chatbot? That's pretty cool. What does it do?
Yeah, well, it's integrated with Funds Bazaar and it provides instant customer support, 24/7.
Okay.
You can ask it questions, get info about your investments, you can even complete transactions.
So it's like a financial assistant, always there to help you.
Exactly.
Pretty cool. So it sounds like they're really trying to make the whole experience, easy and accessible for their customers using technology.
Absolutely.
So that's the tech side of things. But
Yeah.
what about, their physical reach? Are they just focused on the big cities or are they going into these untapped markets?
Well, they're strategically expanding their footprint, especially in those tier 2 and tier 3 cities. They see the potential, that huge potential in those underpenetrated markets. And they're using a mix of physical and digital models to reach that wider audience. In fact, 20% of their AUM comes from these B30 markets.
B30.
Yeah, that's a term they use for locations beyond those top 30 cities.
Okay.
And it shows they're serious about, serving a diverse investor base all across the country.
So not just focused on the usual suspects. They're going where the growth is. Smart move. But it all comes down to this. I mean, are they as financially sound as they appear to be? What's the story behind all these impressive numbers?
Well, why don't we delve into their financials right after we...
Hold on. Let's not take a break just yet. I'm dying to know about this. We've seen the incredible AUM growth, their diversification strategy, all that tech, the expansion plans. But how does all this translate into actual, profitability and investor returns?
All right. Let's keep the momentum going. So one of the first things you notice when you look at Prudent's financials is their track record. They are consistently profitable. Their consolidated revenue from operations, it's been on a steady upward trajectory. It's growing at a compound annual growth rate of 29% from fiscal year 19 to 24. And that growth is fueled by, their expanding AUM, that diversification into insurance and other financial products we talked about, and their strategic focus on those individual investors.
Okay, so serious growth,
Mm-hmm.
but revenue is just one part of the story. What about their expenses, their margins? Are they keeping those costs in check?
Yeah, it looks like they're managing their expenses pretty well. While their operating expenses have also been going up over the years, at a compound annual growth rate of 27% from fiscal year 19 to 24, their revenue growth, it's actually outpaced that expense growth. So what does that mean? It means their operating margins have expanded. They've gone from 16.8% in fiscal year 19 to a healthy 24% in fiscal year 24.
All right, so they're not just growing the top line, they're becoming more profitable, which is good news for investors. But what about the bottom line? Are their profits keeping pace with all that revenue growth?
Absolutely. Their profit after tax, the PAT, has seen a phenomenal compound annual growth rate, 46% from fiscal year 19 to 24.
Wow.
And that growth really speaks to their ability to, generate strong revenue, manage costs, and maintain those healthy margins.
Yeah, those are impressive numbers. But, growth and profitability, those aren't the only things investors look at. What about their cash flow? Are they generating enough cash to, fund their expansion plans and potentially reward shareholders?
Their cash flow is as strong as their profit growth. Their cash flow from operations, it's actually grown even faster than their PAT. It boasts a compound annual growth rate of 66% from fiscal year 19 to 24.
Okay.
So that strong cash flow, it not only lets them fund their organic growth, but also gives them that financial flexibility to, pursue strategic acquisitions if they want to.
Okay, speaking of acquisitions, they have made some strategic moves in that area, haven't they?
Yeah, they have. One notable acquisition was the mutual fund AUM of Carvey Stock Broking Limited. They acquired that back in November 2021. And it was an all-cash deal.
Wow.
And this move, it really boosted their asset portfolio and solidified their market position. They also acquired the mutual fund assets of iFast Financial PVT Ltd., further consolidating their presence in the market.
Smart. So they're using that strong cash flow to strategically expand. But acquisitions can be risky.
Yeah.
How have these performed? Are they contributing to Prudent's overall growth?
It seems so. Those acquired assets, they've been integrated into Prudent's existing operations really smoothly, and they're contributing to both AUM growth and revenue generation. Their management team, they seem to have a knack for identifying and executing those strategic acquisitions that complement their organic growth strategy.
Right, sounds like they're playing their cards right. But what about their commitment to shareholders? Are they sharing that success with their investors?
Well, they definitely seem mindful of shareholder returns. They've got a dividend distribution policy in place, and they've been consistently paying dividends. However, they're also balancing those payouts with their growth plans, making sure they retain a good chunk of their earnings to fund that expansion and those strategic opportunities.
So they're striking that balance between rewarding their shareholders and investing for the future.
Mm,
Makes sense.
mm.
So we've talked a lot about the positive aspects of Prudent's business, but every company faces challenges and potential risks. So what are some of the headwinds they might encounter in the coming years?
That's the million-dollar question, isn't it? While Prudent's doing great right now, the financial services industry, is competitive, it's constantly changing. One challenge they'll need to tackle is the growing influence of direct plans and those fintech platforms in the mutual fund distribution space.
Right, because more and more people are getting comfortable managing their investments directly.
Exactly. They're cutting out the middleman, and that could disrupt Prudent's, traditional B2B2C model.
The rise of the DIY investor.
Exactly.
It's definitely a trend to watch. So how is Prudent positioned to face this challenge?
Well, they're aware of it, that's for sure, and they're adjusting their strategies. They're investing in technology to, make those digital platforms even more user-friendly, more accessible. And they're focusing on providing those value-added services like personalized financial advice, portfolio management tools, things like that.
So it's not just about competing on price anymore.
Yeah.
It's about offering that more holistic experience, right?
Exactly.
Makes sense. What other challenges should they be keeping an eye on?
Well, another one is market volatility. Prudence business, it's inherently linked to market performance.
Hmm.
So a prolonged downturn, it could affect investor sentiment and possibly slow down that AUM growth.
Valid concern. Markets are unpredictable, so how are they managing that risk?
Well, their focus on those SIPs, those systematic investment plans, they encourage those long-term investments, regardless of what the market's doing in the short term. And that helps stabilize their AUM and their revenue, even when things are, a little rocky. They're also diversifying that product portfolio to reduce their dependence on any single asset class or market segment.
So not putting all their eggs in one basket.
Exactly.
This has been incredibly insightful. I feel like we've covered so much from, Prudent's stellar AUM growth and diversification to their strong financial health and how they plan to navigate these, upcoming challenges. What are some of the key takeaways our listeners should be thinking about?
Well, I think it's clear Prudent's performance has been remarkable. They've consistently outperformed the industry in terms of AUM growth and profitability. Their unique B2B2C model, that strategic focus on SIPs, their commitment to technology, all of that's allowed them to scale their business rapidly and efficiently. They're a force to be reckoned with in the financial services world.
Definitely a company to watch. But they can't afford to rest on their laurels now, can they?
No, not at all. The financial services industry never stands still. So Prudent's going to have to keep adapting and innovating to maintain that edge. Their ability to handle the rise of direct plans and fintech platforms, their preparedness for market volatility, those are going to be the key factors in their journey moving forward. And that brings us to some interesting questions that I think our listeners might want to consider.
Okay, let's hear them. What should our listeners be pondering as they, delve deeper into the world of Prudent?
Well, I think one thing to consider is how will the evolving regulatory landscape, particularly things like, commission structures and investor protection, how will those things shape prudent strategies going forward? This is a highly regulated industry, and any changes could significantly impact their business model.
Yeah, regulations. It's true. They can change in a heartbeat. So what else should our listeners be thinking about?
Another thing to consider is how effectively Prudent will use technology, not just for the customer experience, but also to boost their operational efficiency and stay ahead of the digital curve.
Right, because the financial world is becoming increasingly digital.
Absolutely. And Prudent needs to make sure they're not just keeping up, but they're leading the pack.
It's a digital arms race. They got to be ready. So what's the final question our listeners should consider?
Well, how will Prudent balance their ambitious growth plans with the need to maintain profitability and deliver sustainable shareholder returns?
That's a tough one. It's like walking a tightrope. You have to keep moving forward without losing your balance.
Exactly. Growth without profits is unsustainable. But if you only focus on profits, you might stifle growth. Prudent needs to find that sweet spot.
So we've explored Prudent's impressive growth, their strategic moves, the challenges they face. It's a compelling story. I mean, this is a company that's not just thriving, it's shaping the future of financial services in India. But what's the big takeaway here for our listeners?
I think Prudent's on a great path, but their success is going to hinge on their ability to adapt to the changing financial landscape. Their B2B2C model has been a real strength, but they need to evolve to stay relevant in a world that's increasingly dominated by, direct plans and fintech platforms. Embracing technology, navigating those regulatory changes, deepening their penetration in those underserved markets, those are going to be the defining factors in their journey.
This deep dive has been, incredibly insightful. It's given our listeners, I think, a solid understanding of Prudent's business. But as we always say, there's always more to explore. So where can our listeners go if they want to dig even deeper into Prudent's story?
Well, Prudent's investor presentations and Concall transcripts, those are gold mines of information. They give you a detailed look into their financials, their strategies, their outlook, everything. You can find those on their website and on those financial news platforms. It's like a backstage pass to their operations.
Yeah, and as you're exploring, we'd love to hear what you think. What parts of their business model or their performance stood out to you? What questions do you have about their future? Let us know. We always love to hear from our listeners. Thanks for joining us on this deep dive into Prudent Corporate Advisory Services Limited. Until next time, keep learning, keep questioning, and keep diving deep.
Absolutely. So, diving into their financials, one of the first things you notice when you look at Prudent's financials is their track record. I mean, they are consistently profitable. You look at their consolidated revenue from operations, and it's been on this steady climb upward. It's growing at a compound annual growth rate of 29% from fiscal year 19 to 24. And a lot of that growth is fueled by, all those things we talked about. Their AUM expanding, that diversification into insurance and other financial products, and their focus on those individual investors, like we talked about.
Yeah, okay, so serious growth. But revenue is just one part of the picture. What about their expenses and margins? Are they keeping those costs under control?
Yeah, they seem to be managing their expenses pretty effectively. I mean, their operating expenses, those have been increasing over the years too, at a compound annual growth rate of 27% from fiscal year 19 to 24. But that revenue growth, it's actually outpaced that expense growth.
Okay.
And that's led to their operating margins expanding. So they've gone from 16.8% in fiscal year 19 to a healthy 24% in fiscal year 24.
All right, so they're not just growing the top line, they're also becoming more profitable, which is good news for investors. What about, their bottom line though? Is their profit growth keeping pace with all that revenue growth?
Absolutely. Their profit after tax, the PAT, it's witnessed a phenomenal compound annual growth rate. We're talking 46% from fiscal year 19 to 24.
Wow.
And that impressive growth, really, it just shows their ability to generate that strong revenue, manage the costs well, and keep those margins healthy.
Yeah, those are really impressive numbers. But, growth and profitability, those aren't the only factors that investors consider.
What about their cash flow? Are they generating enough cash to fund all those expansion plans and also, potentially reward shareholders?
Well, their cash flow performance, it's actually as robust as their profit growth. So their cash flow from operations has actually grown even faster than their PET. It boasts a compound annual growth rate of 66% from fiscal year 19 to 24.
Okay.
And all that strong cash flow generation, it not only allows them to fund their organic growth, but it also gives them that financial flexibility to pursue, those strategic acquisitions if they want to.
Right. And speaking of acquisitions, they have made some pretty strategic moves in that area.
Yeah, they have. One that really stands out is the mutual fund AUM of Carvey Stockbroking Limited, which they acquired back in November 2021. It was an all-cash deal.
And that acquisition, it really boosted their asset portfolio and really kind of cemented their position in the market. They also acquired the mutual fund assets of iFast Financial PVT Ltd,
Yeah.
further solidifying their presence.
Smart. So they're using that strong cash flow to strategically expand the business.
Yeah.
But acquisitions can be risky. How have these performed? Are they contributing to Prudent's overall growth?
It seems so. Yeah, I mean, those acquired assets have been integrated into Prudent's existing operations, and it seems to have gone pretty seamlessly. And they are definitely contributing to both their AUM growth and their revenue generation. Their management team, I got to say, they seem to have a real knack for identifying and executing those strategic acquisitions that really complement their organic growth strategy.
Yeah, all right. Sounds like they're playing their cards right.
Sure.
But what about their commitment to shareholders? I mean, are they sharing that success with their investors?
Well, they certainly seem to be mindful of shareholder returns. They've got that dividend distribution policy in place and they've been paying dividends consistently. But they're also balancing those payouts with their growth plans, you know. They're retaining a significant portion of their earnings to fund that expansion and go after those strategic opportunities.
Right. So they're trying to strike that balance between, rewarding their shareholders and investing for the future, which makes sense. We've talked a lot about all the positive aspects of Prudent's business, but every company faces challenges.
Mm.
So what are some of the headwinds that they might run into in the coming years?
Yeah, well, as well as Prudent is doing right now, you have to remember the financial services industry is incredibly competitive and it's constantly changing. One challenge they're going to have to address is the growing influence of direct plans and all those fintech platforms in the mutual fund distribution space.
Right, because more and more investors are comfortable managing their own investments directly now.
Exactly, they're cutting out the middlemen. And that could have an impact on Prudent's traditional B2B2C model.
So the rise of the DIY investor,
Hmm.
that's a trend to watch.
Definitely. So, how is Prudent positioned to face that challenge?
Well, they're definitely aware of it, and they're adjusting their strategies. They're investing in technology, to make those digital platforms even more user-friendly, easier to access. And they're focusing on providing those value-added services. So things like, personalized financial advice and portfolio management tools.
Right. So it's not just about competing on price anymore. It's about offering a more holistic experience.
Precisely.
Okay, that makes sense. So what other challenges should they be keeping an eye on?
Another big one is market volatility. I mean,
Mm.
prudence business, it's inherently tied to how the market's doing.
Hmm.
So a prolonged downturn, that could affect investor sentiment and slow down that AUM growth.
That's a valid concern. I mean, markets can be unpredictable, so how are they managing that risk? Well, their focus on SIPs, those systematic investment plans, they actually provide a bit of a buffer against market volatility. They encourage investors to stay invested for the long term, regardless of what's happening in the short term.
Right.
And that helps stabilize their AUM and their revenue streams even when things get a little rocky. They're also diversifying that product portfolio so they're not so dependent on any single asset class or market
Right.
segment.
Smart. Okay, so they're taking steps. This has been incredibly insightful. I mean, we've covered so much ground from, Prudent's incredible AUM growth and their diversification strategy to, their robust financial health and how they plan to deal with these challenges. What are some key takeaways our listeners should be thinking about?
Well, I think it's clear that Prudent's performance has been, I mean, nothing short of remarkable. They've consistently outperformed the industry, both in terms of AUM growth and profitability. That unique B2B2C model, their strategic focus on SIPs, and their commitment to technology, all of that has allowed them to scale their business rapidly and very efficiently. I mean, they're a force to be reckoned with in the financial services landscape.
Yeah, they're definitely a company to watch, but, they can't rest on their laurels, right?
No, absolutely not. The financial services industry, it never stands still. So Prudent's going to need to keep adapting and innovating to maintain their competitive edge. Their ability to handle the rise of those direct plans, the fintech platforms, and how prepared they are for market volatility, those are going to be critical factors in their journey moving forward. And that brings us to some really intriguing questions that I think our listeners might want to ponder.
Okay, let's hear them. What should our listeners be thinking about as they, delve deeper into the world of Prudent?
Well, one thing to consider is, how will that evolving regulatory landscape, especially with things like commission structures and investor protection, how will that shape Prudent's strategies in the future? The financial services industry is heavily regulated, and any changes, I mean, those could have a big impact on their business model.
Yeah, that's true. Regulations. They can change like the wind. What else? What else should our listeners be thinking about?
Another thing to ponder is how effectively Prudent will leverage technology, not just to, improve that customer experience, but also to boost their operational efficiency and really stay ahead of the curve, digitally speaking.
Right, because The financial world is rapidly becoming more and more digital.
Absolutely. And Prudent needs to make sure they're not just keeping up, but leading the charge.
Yeah, it's a digital arms race.
Yeah.
They got to be ready. So what's the final question our listeners should consider?
I think it's how will Prudent balance, all those ambitious growth plans with the need to stay profitable and deliver those shareholder returns?
Ooh, that's a tough one. It's a delicate balancing act.
It is, because growth without profits, that's not sustainable. But if you just focus on profits, you might stifle growth. Prudent's got to find that sweet spot.
I got to walk that tightrope. Okay, so we've explored their impressive growth, their strategic moves, the challenges they face. It's a compelling story. This is a company that's not just thriving, but it's really shaping the future of financial services in India. So what's the big takeaway here? What do you want our listeners to remember?
I think Prudent is clearly on a great path, but their continued success, it really hinges on their ability to adapt to the ever-changing financial landscape. That B2B to C model, that's been a key strength, but they're going to have to evolve to stay relevant in a world where, direct plans and fintech platforms are becoming more and more popular. Embracing those technological advancements, navigating those regulatory changes, deepening their reach into those underserved markets, those are all going to be defining factors in their journey.
So this deep dive has been, really insightful. I think it's given our listeners a solid grasp of Prudent's business, but we always say there's always more to explore. So where can our listeners go if they want to, dig even deeper into Prudent's story?
Well, Prudent's investor presentations and their Concall transcripts, those are gold mines of information. You get a detailed look at their financials, their strategies, their outlook. You can find those on their website and also on those, financial news platforms. It's really like getting a backstage pass to their operations.
Yeah, and as you're exploring all of that, we'd love to hear what you think. What aspects of their business model or their performance really stood out to you? What questions do you have about their future? Let us know. We always love to hear from our listeners. Thanks for joining us on this deep dive into Prudent Corporate Advisory Services Limited. Until next time, keep learning, keep questioning, and keep diving deep.
Absolutely. Yeah, it's been pretty fascinating, exploring Prudent's world.
Absolutely. I feel like we've uncovered a ton about how they operate, their strategies, even the challenges they face. I think one thing that really stuck out to me was their adaptability. They're not afraid to embrace change, whether it's, diversifying what they offer using technology or expanding into these new markets.
Yeah, I agree with that. That willingness to adapt, it's crucial in a dynamic industry like financial services,
Yeah.
and that commitment to their B2B to C model. But at the same time, recognizing that, they need to evolve as things like direct plans and fintech platforms come into the picture. It's a tough balance, but they seem to be managing it pretty well.
Yeah, it's like they're constantly fine-tuning, making sure they're staying ahead of the game. And their focus on those value-added services, things like personalized financial advice, that's smart. They're not just pushing products, they're building relationships.
Exactly. They're positioning themselves as those trusted advisors, not just, transactional platforms. And their expansion into those tier 2 and tier 3 cities, that shows real vision. They see the potential in those underserved markets and they're actively going after it.
It's like they're planting the seeds for future growth. But, we can't forget about the challenges they're facing. Regulatory changes, market volatility, technology always changing, all factors that could have an impact on their trajectory.
Oh, for sure. It's not always going to be smooth sailing, but it seems like they've got a solid plan for managing those risks. The focus on SIPs, diversification, that commitment to innovation. It's all part of how they're mitigating potential risks.
So they're not just hoping for the best. They're actively getting ready for the unexpected, which, brings us back to our listeners. What final thoughts? What would you leave them with as they continue to learn about Prudent?
I'd say look beyond just the numbers. Prudent's story. It's more than just financial data. It's about their vision, that adaptability we talked about, and a commitment to creating value for both their customers and their investors. So when you're looking at those investor presentations and con-call transcripts, keep that in mind. It'll give you a much deeper understanding of their journey.
Great advice. And remember, investing is a journey, not a destination.
Mhm.
So as you're learning about Prudent, think about whether their values match up with your investment philosophy. Do you believe in their long-term vision? I think the answers to those questions will really help you make informed decisions. Thanks for joining us on this deep dive into the world of Prudent Corporate Advisory Services. We've covered a lot. But this is just the beginning. Keep exploring, keep learning, and as always, keep diving deep.